Good morning, venture capital. This is Metagame, and today's episode is about the tale of two cities in the Sunshine State. Why one coastal hub is losing its momentum while its northern neighbor is experiencing an unprecedented boom. Everyone's still talking about Miami like it's 2022. Meanwhile, the actual money is packing up and driving an hour north. And if you're not tracking where the allocators are moving, you're about to spend the next 18 months wondering why your deal flow dried up. Here's what I mean. Miami's venture deal count dropped 25% quarter over quarter, 60 deals in Q3, 45 in Q4. At the same time, West Palm Beach surged 39%, 18 deals to 25. Now, you might look at those numbers and think, okay, small sample size, who cares about Palm Beach? And that's exactly the kind of thinking that gets you left behind. Because this isn't about one quarter. This is about where decision-maker density is concentrating. And right now, it's concentrating in Palm Beach County. Let me give you the headline that should have reframed your entire Florida thesis. In January, Wells Fargo announced it's relocating its entire wealth and investment management headquarters to West Palm Beach. Not Miami, not Brickell, West Palm Beach. A top 5 U.S. bank is centering a major P&L in Palm Beach County. That's not a real estate play. That's a signal about where institutional wealth infrastructure is being built for the next decade. And the housing data confirms it. Redfin's March numbers show West Palm Beach luxury pending home sales up 30% year over year. 30%. Meanwhile, national luxury demand fell 3.6%. When high net worth households are forming somewhere at that rate, while everywhere else is cooling, you're looking at a leading indicator. Luxury housing precedes GP, LP, and family office infrastructure by 12 to 18 months. The allocators are already there. The deal flow follows. So what's actually happening in Miami? Is it dead? No, it's mature. And in venture, mature is a very different game than growth. The Real Deal reported in April that South Florida's office leasing is now driven primarily by in-market company moves, not new-to-market relocations. The post-COVID migration wave has crested. The hedge funds that were going to move from Connecticut already moved. The crypto founders who were going to flee New York already fled. What you're left with is a denser, more efficient market where local operators have home field advantage. If you built a Miami sourcing strategy on the assumption of continuous inbound migration, you're now competing against people who've been there 3 years longer than you. They know the founders. They know the lawyers. They know which coffee shop the family office principals actually go to. You're the outsider now. And in a mature market, outsiders pay premium prices for worse information. That's the Miami story. But Florida isn't a Miami story anymore. It's a state-level infrastructure play. And that's where this gets interesting. Let's talk about Tampa. 16 deals, $3.8 billion in capital deployment. Steady, unsexy, and exactly the kind of market that gets ignored until someone makes a fortune there. TransFi, a Tampa-based payments infrastructure startup, closed a $19.2 million financing in March, $14.2 million in Series A equity, plus a $5 million committed liquidity facility. Stablecoin rails, cross-border payment infrastructure. This is the money movement 2.0 thesis that institutional capital has been circling since FTX collapsed, and everyone realized maybe we should build actual infrastructure instead of just trading tokens. Tampa's advantage is operational cost structure, lower burn than Miami, less wealth-driven real estate inflation than West Palm Beach, but still inside Florida's tax and talent ecosystem. It's the value play. You're not paying the Miami premium. You're not competing with Palm Beach family offices for the same 3 engineers. You're accessing the same regulatory environment and founder pipeline at a discount. And here's the thing about Tampa that most coastal VCs miss entirely. The city has deep logistics and supply chain expertise. Port of Tampa, freight tech, operations DNA. That matters because the next wave of AI deployment isn't going to be chatbots and image generators. It's going to be fraud detection, treasury automation, real-time FX hedging, boring, massive, infrastructure-level AI. And Tampa's operational expertise makes it the Florida city best positioned to deploy and monetize that category. Now let me zoom out for a second, because the numbers at the state level tell a story that should change how institutional allocators think about geographic concentration. Florida total for 2025, 219 deals, $50.1 billion in capital deployment. That's larger than all of Texas's annual deployment in most pre-2020 years. It rivals the Midwest's combined output. This is Tier 1 scale, and the geographic distribution reduces single city risk. Miami at 45 deals, West Palm Beach at 25, Tampa at 16, Another 133 deals scattered across Jacksonville, Orlando, and smaller metros. A Florida-focused fund isn't a Miami bet. It's a state-level infrastructure play spanning wealth management in West Palm Beach, fintech in Miami, logistics and AI infrastructure in Tampa, and emerging life sciences clusters in Jacksonville and Orlando. The strategic question every VC should be asking right now: are we tracking where decision makers live or just where deals are filed? Because those two things are diverging. The Wells Fargo move and the 30% luxury housing surge suggest allocator density is shifting faster than deal flow. If your sourcing is Miami-centric, but your LPs and co-investors are moving to Palm Beach County, you're geographically misaligned with the next 12 to 18 months of capital formations. And there's an arbitrage here for the early movers. West Palm Beach doesn't yet have the venture density to be efficient. The city is in early innings. That means information asymmetry still exists. Pricing anomalies still exist. The founders raising there aren't getting shopped to 15 funds in a week like they would in San Francisco or even Miami. You can actually build relationships. You can actually get allocation. But that window closes fast once the institutional infrastructure catches up to the wealth migration. Let me give you the framework. Miami is your fintech play. The crypto winter hurt, but the payments and banking infrastructure being built there is real. West Palm Beach is your wealth tech play. AI-powered family office infrastructure, tax optimization SaaS, multi-generational estate planning tools. The UHNW density creates a natural customer base. Tampa is your AI infrastructure play. Payments rails, logistics automation, supply chain AI. Boring, but massive. A fund structured as Florida-wide, with city-specific theses, captures state-level deal flow while avoiding single metro risk. That's the sophisticated play. That's what the smart money is building toward. The risk of ignoring this trend is simple. If you're still running a Miami equals Florida mental model, you're 12 months behind the wealth migration. The 25% quarter-over-quarter drop in Miami deals is a leading indicator that the post-COVID relocation tailwind is exhausted. VCs who built Miami practices in 2021 and 2022 are now competing with 3+ years of local GP and operator accumulation. Home field advantage has flipped. Meanwhile, West Palm Beach's 39% surge is early innings. Tampa's steady $3.8 billion is underpriced, and the family offices, the RIAs, the institutional wealth platforms that will write the LP checks and make the co-investment decisions for the next decade are centering on Palm Beach County. So here's where we close the loop. Everyone's still talking about Miami like it's 2022, but the actual money packed up and drove an hour north. Wells Fargo moved its wealth headquarters. Luxury housing is surging 30% while the rest of the country cools. Deal flow is following allocator density, just like it always does. The question isn't whether Florida is still hot. It is. $50.1 billion and 219 deals prove that. The question is whether you're tracking which Florida city is capturing the next wave of allocators. Because if you're not, you're competing in a mature market while missing the early innings happening 60 miles up I-95. The money already moved. The only question is whether you noticed. That's our venture capital podcast for today. If you learned something new, tap 5 stars and follow our show. Thank you for listening to Metagame.
Grep News. Thomas.